Let's bring in Evan Lucas over at IG in Melbourne. Firstly, I want to get your thoughts. RBNZ, the first, as I mentioned, developed economies to lift rates.
Yeah, it certainly was, James. And look, you've got to have a look at what the economists were saying. All 100% of those surveyed were expecting that to happen. So there wasn't actually a really big reaction to the story when it broke. If you have a look at the Aussie Kiwi, it sort of held firm for a little while. It's now starting to slide quite quickly. It's now firmly got its January low inside of 104.2, so that is an interesting level to watch, but it's still above the 105 level, and that will be one to watch as well. There may be a bit of positioning, as you alluded to, with regards to the Aussie jobs numbers, because that could also be slightly detrimental to the Aussie dollar. So watching that one quite closely, but as I said, it was expected. It was interesting to hear what Graham Wheeler said. He was obviously also suggesting over the next 2 years you could see as much as 2% rate hikes over that time as they try to rein in inflation. They also believe that even with the current FX sort of change, that it doesn't see as a massive headwind to the economy. So that is also an interesting development coming out, what he said. But all in all, was expected. So that was probably what we saw out of New Zealand. We then got to move, as I said, to here and watching what's going on with our market from a macro perspective. Jobs numbers today have been incredibly choppy over the last 3 months, James, and watching that, it will be very interesting to see the employment change, because that has certainly been what the major driver has been on the FX side. Full-time employment at the moment is under real pressure. It has been in negative territory for the last 3 reads, and it has been a real big concern about how the underlying economy looks, considering that in part-time employment has been propping up that number. So expectations are for 15,000 jobs added, but it will be the breakdown of how that full-time, part-time employment looks. Expectations are for the unemployment rate to actually hold at 6%, but again, a lot of estimates are putting on a forward look that we could hit 6.25% or even 6.3% over the next 2 or 3 months. So we do know about the jobs losses. You know, you've heard about Qantas, your Ford, your Holdens, etc. They're all the big news stories. But underlying that, the mining services industry and also the mining industry has started to see a wane in headcount numbers as well. So it may put a dampener on that read today, and that's certainly leading into what we can see in the morning trade, which looks very, very flat indeed.
Do you think the, I suppose, expectation or waiting for the China data as well is going to impact today's trade?
Maybe. We've also got to remember that the China data is actually out after our market shut, so it comes out at 4:30, but it's certainly part of that. Now, interesting development yesterday was what happened on the Shanghai Copper Exchange. So for the May delivery for copper on Shanghai limited down on the opens. That's a 5.5% drop. Closed the day in the positive, up around about 2.1%. So massive shift in terms of how copper traded. It's why you saw towards the back end of the afternoon that the CSI 300, which is the Shanghai futures, actually moving from a negative read to a positive read. So there is possibilities that maybe the industrial production number, which is what you'll be watching quite closely, expectations for 9.4% growth there. That's not too bad. It is slower and below trend, but it's certainly not as bad as some has expected. You also got the fixed asset investment coming down as well to 19.4. Now, considering that the central government and the PBOC have been trying to rein in property investment, that will also be an okay idea, because it might mean that that hot money that we've seen into China is flowing to other parts, and that's why the stock exchange is an interesting one in China. It does look quite cheap. You've got a middle class that is looking to put its money somewhere. Maybe we might see some investment into China. So yes, the Chinese data will be a big lead because those worries are there. Again, you will have Chinese Lunar New Year being a retrospective impact on that, but it might not be as bad as what we expected, considering what we saw in copper in Shanghai, and the futures over there pointing a little bit higher as well. So watching that, it will probably be a bit of a factor for our market, unfortunately, tomorrow, and it may actually see future running, and that might mean we drag a little bit lower as people try and hedge for a possible bad read.
What about gold? What did you make of the moves, the upward momentum in gold overnight?
Yeah, gold's an interesting one. So you've now got gold is up roughly $110 or thereabouts from its low in December last year. And you've got to ask yourself the question, there is a very good investment case in your portfolio for gold. And the reason for it, that you've got, worries across the globe. So you've still got the Russian-Ukrainian crisis sort of bubbling in the background. You've got the China worries, very sluggish growth coming out of Japan, indifferent data out of the US. All of that puts safety as a front funding. You're not getting a huge, massive return as you probably would on the bond market. You can already see PIMCO today talking about the amount of funds they've had coming out of their bond area, and gold therefore looks like a nice little area to put some of your funds, and that's certainly what is happening in gold at the moment. 1366, that's a really good move. It gapped up. You also saw it making a new higher position last night on the close. All of that is a very positive move, and that's why at the moment I think you can see people moving out of the currency markets, moving away from bonds and having a little bit of safety in their portfolio, and that is certainly what you can see in the gold price at the moment. So not surprising that yesterday 5 of the 6 top movers on the ASX were gold stocks, and out of that 9 of the 10 biggest movers yesterday were materials plays that had gold assets to them. So gold is one to watch. It's an interesting development considering how much it was in a bear market last year, and it does look like on a short-term view with those macro concerns that it could be another sort of gapping up to around about sort of $1,400 if it continues to move the way it has.
And look, just finally, wrapping it all together, what are you expecting for the session today?
Very flat day today, James. Having a look at what we're seeing, it's about 1370, 1375, so really, really small moves. That is ever so slightly on the negative, but not by much. And I think you might see it's a real holding pattern. We got no real major leads out of the US. As I said, China's settled down in the afternoon trade, which we missed out on getting, so that may actually see us evening out what we saw in Europe. So very flat day. It'll again be governed by, as I said, the employment data is the one to watch for us here in Australia, and then in the afternoon looking into that Chinese data particularly. But very, very flat trading. You may see some positioning, not a huge amount of movement out there, unfortunately.
All right, Evan, thanks very much. Appreciate it.
Thanks, James.